Hey guys, this is Tony Benson with Wealth Builders HQ and creator of Patterns in a Flash. We are going to very quickly go through the review of what we looked at last week, the pattern of the week. And here's what we looked at. First, let me get the disclaimer out there, of course. We're not registered broker-dealers, investment advisors. I will not give you any recommendations or advice. Everything that we do here is purely for educational purposes. If we do mention trading, just assume that it is a paper trade or a practice trade. For regulatory reasons, we do not discuss funded trading. So let's take a peek here. We looked at Microsoft on a double top. That has played out beautifully. QS started out beautifully, but then it kind of took a turn. So let's take a jump over to our Omega charts and take a look. There is Microsoft. That was, let's see, when was it? It was a week ago, the 22nd. There's a day we looked at it as a double top, right? If we go to a line chart, you can see it much more clearly. Nice little double top. If we break that midpoint, the odds are we're going lower. The trading plan was this, with the stop at 297.86, target of 265, and an entry point of 289.65, which, if you're like me and you like to trade aggressive but also conservative, what a lot of times I will do is put an entry point in maybe a little earlier, maybe dip my toe in the water a little early, just pick up one, maybe two contracts ahead of time, just in case it does move, and then add to it as it moves in the right direction. In this case, whatever you may or may not trade depends on your strategy, what your style is. You may not trade like me, and that's perfectly fine. This is your own business. The beauty of it is you can do whatever you want with it. But the nice part is Microsoft did take a tank, dropped off big volume, confirming that double bottom. We actually confirmed it Wednesday. Or let's see, what even day is that? That's Monday, excuse me. 27th, yeah, that was Monday. Broke below the midpoint of the double bottom. Actually, if this is the midpoint of the double bottom, this is another point it needed to break, which it obviously did the day before today, actually. It gapped down and hit that entry point right at it at 290 and then tanked. And it's still holding it right now, and I wouldn't be surprised to see this thing drop off to 265. So we'll see if we hit the target on that one. The other one, QS, similar type of deal where we looked at it. Where's the 22nd? Let me throw a line on there. Was right there the day before. In fact, I was a little cranky at myself. I missed the day trade on this. 2409. I had and I don't have my intraday charts up. I remember it very specifically. It was Thursday morning. There was a nice little ascending triangle going on a 5-minute chart. I went, that's beautiful. Put a trading plan in, 2409, and I literally missed it by about 1 or 2 minutes. And one of the hardest things to do as a trader, especially on a day like that, is to stick to your plan. And actually, it's not hard to stick to your plan once you've experienced a situation where you get in after you're supposed to get in, and then it goes back and you take a bigger hit than you should have. But the difficult part after missing something like this, because you can see that day it ran. I mean, 2409 was my entry point, which was almost at the open. 2409, it ran to 27.60, so that's what, $2.5, $3? So I missed $2.5, $3 per share on just an intraday trade. So, and I can't remember exactly how many. I was probably going to pick up 400 or 500 shares, so that would have been around $1,000. And it all happened within 2 or 3 hours. So it was a little frustrating. But one of the difficult things of trading is discipline and sticking to your plan. I missed it by 10 cents. Do I wish I would have gotten in? Yes. The discipline comes in on the next trade, making sure that you don't deviate from your plan, because the last one, you should have deviated from your plan, but you didn't. The beauty is, even though I missed a spectacular trade, I'm happy that I didn't deviate from my plan. So am I cranky that I missed out on an $800, $1,000, $1,200, $1,500 trade? Yes. But am I ecstatic that I stuck to my plan? Yes. Because ultimately, if you have a plan that is solid and good, then sticking to your plan is going to pay off in the long term a lot better than missing one trade. That little $1,000 or so that I may have missed out on will pay off 100 times over the life of your trading career. And you'll notice, though, that I didn't pick up a swing trade either on this. I decided to wait on that because I missed it too, which is frustrating. And I know some people say, well, how do you miss so many? You miss trades all day long. All day, every day. I missed 3 day trades today. It happens every day, all day. And you got to get used to it. It's just one of those things. It is what it is. And this thing did run that day and then the next day, and then it obviously, you can see it fell back. So if you did happen to grab this swing trade, then you should have stopped out of it somewhere here with, maybe a tiny profit, break even or so, is about what you would have been. So let's hop through and look at the other ones that we've been watching. Let me switch this a little bit. There we go. AES actually triggered. This has been on the radar for a little while. It finally triggered over the last few days. and moved the right direction. So it's going well right now if you've still been watching that. AMC, this was an evening star. And as you can see, this is more, I'm showing this mostly for example. It didn't even have a trading plan on it. That's what an evening star can do. We've dropped from 47 to 35 in the last week and a half. I highlighted this as a pattern of the week, as an evening star. And again, it's not one of those things that you can necessarily, it's a short-term trade. Candlesticks are very short-term in nature. But you can see how this has played out. So this was more of an example than anything else. CNP. Nice little, you could call it a head and shoulders, a double top, whatever you want to call it. If you do treat it as a head and shoulders, it came back to the neckline, reversed, and now it's running back down. So if you didn't catch this on the move there may be some potential still for the head and shoulders to play out there. Lows, we're looking at I'm still not that excited about this. The market is in a pullback mode right now. It seems like every team watching the intraday charts, seems like every time it rallies up, sellers come in. And it's been like that for a couple weeks. So for the last year and a half, we've been buy the dip mode, buy the dip, buy the dip, buy the dip. And it seems to have flipped, at least in the short term, to sell the rally, which is when things get into bear mode, that's what happens, right? The bears sell the rally. And anybody who wants to take profit, you sell the rally. I don't think we've completely switched from bullish mode to bear mode yet, but I think we're in the process. I think in the short term, we're in bear mode. I keep seeing the selling the rally, so I'm not excited about a bullish trade on lows. Even though the pattern is still there. Mondelez actually just triggered the target yesterday. You can see we had a head and shoulders here. There's a beautiful head and shoulders. And it broke. And it took a while. This was highlighted back here somewhere. I don't remember exactly where it was. But then it finally triggered the entry point 2 or 3 weeks ago. Dropped very quickly, then it went and danced. And these dash lines, I created an alternate trading plan and said, okay, if it breaks that $60 level and really tanks, it's probably going to 58. So that's exactly what happened. It's exactly what I expected to have happen. So Microsoft we looked at. Micron is another one that just today triggered another entry. Of course, that was earnings. This was the one that looked beautiful, but we had earnings coming up. That's where it was. Last week, we were looking at this in the Patterns of the Week class that's exclusive for Patterns of Flash subscribers. We looked at this one as a potential trade, but then earnings was coming up. And it just came out, and obviously the market did not necessarily like it. So at least not today. We'll see what happens tomorrow. Open is another one. This is one that I remember saying I would not trade it on the entry point here if it broke above 18 because it ran from 14 to 18 very quickly. And I thought it's going to run out of steam. It's probably not going to keep going. It could. I mean, I've seen it before, right? Where it runs like this and it just keeps on going. And I miss those. But that's okay. But this one did exactly what I kind of expected it to do. It ran out of steam. It broke, hit the entry point, ran up a little bit, and then boom. 4 days, it dropped off. And then it triggered to stop. So I'm glad I didn't get in because, well, I would have stopped out one of these days at a break even. But I don't care. But then it did come back and bounce back. And I remember looking at this and saying if it gets back above that 18, it very well could continue. And sure enough, it did run. So the last couple days it's dropped back off. Not sure if y'all picked this up or not, but we'll see if it runs to the target or not. I'd be tightening the stop up for certain, probably right about here is where I'd be looking at putting a stop. And QS we already looked at. So that is it for the review. Longer review than normal, but quite a few things to look at. So anyway, let me sign off. This is the Pattern Whisperer signing off, reminding you that if you're going to fail at just one thing, fail at quitting. Bye-bye for now.
Folks, thanks for watching. I hope you enjoyed the training. Now, if you did, be sure to give us a thumbs up and go ahead and hit the subscribe button right over here and hit the bell to keep up with all the latest trading content. And oh, did you know that we have a podcast? Supercharge your trading education with the Stock Market Millionaire, which you can find in the description down below. And while you're there, you can also find other amazing free trading resources that I put together just for you.